Here is my stock pick for the date of Tuesday, June 21st, 2011. We're looking at CYT Industries. CYT Industries, CYT, is listed on the NYSE and has recently been showing some signs of technical strength. And also, just today, as in right in this area, we had a breakout. Here, I'll give you a chance to take a look at the pattern yourself, and we can maybe get an idea of what we're looking at. Here, I'll give you a hint. There, symmetrical triangle. Now, there's one other big caveat on this. Actually, I'll show you that one in a second. Symmetrical triangle. Up, down, and right here, it broke out. And also broke out with some volume. That's also nice. So, broke out a symmetrical triangle. We do our normal thing, measuring rule, take the height of the pattern from the highest high down to the lower trend line, scoot it to the breakout point, and gives us a target of about $62.50, which is actually near its definitely its 52-week high, but the last time it was trading at that price was, yep, right before the crash in 2008. Let's see. That is May of 2008. So we go back to the normal chart, and now let's take a look at the studies. Just gotta get my sidebar open here. There are the studies. Okay, so what do we have? First, let's take a look at this study. We're going to basically zoom to the front and say, all right, what can we conclude? Who cares about the price for now? We're just taking a look at this study. Right here, we can see something that looks kind of like a symmetrical triangle, right? And when did it break out? Actually yesterday. Our buy signal would be yesterday then. So we have a breakout to the upside in the momentum index. Great. Next, take a look at the stochastic index. We had a buy signal when? 2 days ago. We had a buy signal right there. Also bullish. Next part. This is the money flow index. Usually something that people tend to overlook, but I like to use anyway. We don't have a buy signal yet, but maybe we could say that this one's going to lag a little bit. Who knows? But our buy signal would probably occur just after one more strong up day, when that trend line would break through this circled level right here. All right, let's get rid of those studies so we can actually get an idea of what we're seeing. There we go. Finally, volume. What's going on? The breakout was today. It had some decent volume. Of course, the few days before were both volume spikes, but decent breakout volume. I'll take it. So what is our strategy? Target is 62.50. We go to the 60-day chart, 2 hours, and see where we could place a stop. Actually, just because this looked like a false breakout to the downside, I'm going to take a look at a couple moving averages just to make sure we don't have any hidden support. Remember that one post, HOT, where I said your moving average means nothing? I mean, your support level means nothing. It's because sometimes the moving average is stronger. Okay, it looks like that one we're fine. And let's take a look at one more, just to make sure that nothing fishy is going on. Let's try the 20-day moving average. Nope, we don't have any moving average. This is right here. It is a true bear trap, and I even circled at that. Just a second. There you go, bear trap. Alright, so anyway, what are we going to do? We're going to buy tomorrow at the best price that we can, because it already has broken out. I would assume that it would get to about $55 before day's end. So you could buy around 55, maybe 55.05, 55.10, just hitting that last support level. And our stop level is going to be, let's see, 55. Our target's $7 away. Here, this is an easy one. We'll exit if it breaks the 200-day moving average, which is currently sitting at $53 and about 50 cents. It'll be up by tomorrow. We're just going to do that, 53.50. That gives us about a $1.50 risk. Our reward is about $7.50. Our symmetrical triangle success rate is about 66%. So we do the calculations. We do 0.66 times our reward, which is going to be $7.50. 66, our probability of success. I think I spelled success wrong. 66%. Stop level is 53.50, which gives us a risk of $1.50. And we're looking to enter around $55. So we do $7.50 times 0.66 divided by divided by $1.50 times the complement of 0.66, which is 34%. And I'll actually do the math right here. My handy dandy little calculator. So we got 750 times 0.66 and parenthesis divided by start parenthesis 150 times 0.34 and end parenthesis, and our probability adjusted risk to reward is 9.71. And that's based on historical data, the probabilities by the Tom Bulkowski studies that took place within the first decade of the millennium. So favorable reward risk ratio, we generally like at least 5 or 6, just to stay conservative. Conserve capital, try to get gains. All right, next part. Take a look at this, the point and figure chart. We actually had just today a buy signal, and see if I can actually make it a little more clear. There we go. We had a buy signal when the price hit $55.50. It broke this trend line, which is just a typical 45-degree trend line. It's a point and figure thing. It's kind of like it's a Jeep thing, don't ask, but it's a point and figure chart thing. And this one actually gave us a price target of, if you can see up here in the small print, $64.21. That's pretty close to our 60. No, it isn't. But we have a $64.21 target, and we have a $62.50 price target. Needless to say, we have two charts both giving the same signal. That's good. Now, here's the one thing I want to make a note of. Getting rid of all that. What would happen if somebody would say, and just keep this in mind, what does this pattern look like also? it almost looks like a head and shoulders, with this being a shoulder, this being the head, and this being the second shoulder. Why is it not? We analyze the volume. On head and shoulders patterns, volume is always highest on the first shoulder. It is always lowest on the last shoulder. It is usually in between, in the middle. In this one we have volume lowest on the first shoulder, highest on the head, and lowest on the second lowest on the second shoulder, with very much accumulation afterwards. It's called a bear trap. It's a false breakout to the downside. Alright, so you got the trade. Enter around 55 bucks. Expect it to go to around 62.50, maybe a little bit more if you want to follow the point and figure chart. Now, the last thing about this, I don't think it's going to get there pretty quickly. I think like this was our bottom trend line of the symmetrical triangle formation. If we take this out, like here, make it a little easier. There's our two lines. We take this chart and we resize it to see what's going to happen in the future, and put our price target of 62.50. It's not expecting to get there until January or February, so this is certainly a sideways stock. It might go slow. Just a fair warning. Alright, so you got your strategy. If you have any questions, please post in the comment box. Thanks for watching.